What is up, everyone? My name is Mike Smith. I'm a loan officer with Union Home Mortgage, located here in Knoxville, Tennessee. And if you're in the Knoxville area or anywhere across the state, I am here to help you get qualified for a mortgage that's structured for your needs, ultimately to get you into the perfect home. Today, we're going to look at interest rate trends and what we can expect in the near future. Now, please watch to the end of the video because I do have a tool that just might help you save some money as you're looking to purchase a home. Now, before we talk about interest rates in the future, I do just want to encourage you in something. You know, when the Fed was stimulating the economy, we were all getting those stimulus checks. They were paying people more than what they would make at work. They were paying people to stay home. And of course, they were infusing money into the money supply. You know, at the time, many of us were benefiting from it, and it was great. You know, it was great getting those stimulus checks. But ultimately, I think you and I know, based on high school economics, that eventually the overstimulation of the economy was going to come at a price, and that price is inflation. And the reason why I want to talk about this is there's so many experts that were saying so many different things, including the Fed. Remember when inflation was going to be transitory, or the housing market was going to continue to just grow through the roof and there was going to be no correction, or cryptocurrency, you know, just on the way up and up and up, and now, you know, take a look at what's happening with that. Trust your instinct, because many of us, I'm convinced you knew that we were playing with fire, but the experts who have stake in the game and have some biases can come in and bring a lot of confusion. But we're at a place right now of high inflation, high cost of living that ultimately, deep down inside, I think a lot of us knew that we would eventually be here. So all I'm saying is, yes, listen to the experts, but don't be afraid to trust your instincts either when you're making financial decisions, especially big important ones like purchasing a home. We all know the past few years have been pretty unprecedented, with the Fed trying to fight COVID and keeping us out of a recession. They, of course, went way overboard and inflated the money supply. They reduced interest rates to really a ridiculous rate to stimulate the economy, and they overstimulated it, overheated it, and now we're seeing the effects of that, which of course is inflation. And we saw those wild, ridiculous home prices over the past few years that we're now trying to recover from and to see get normalized. So where are we right now, and what should we be looking at as we go into the future? Jerome Powell, who is the head of the Fed, as part of the monetary policy, quantitative easing, infusing money into the monetary system, and also artificially lowering interest rates. Remember those 2.5% mortgage rates. Now realizes that inflation is not transitory. It is deeply embedded into our economy. He's been saying this for months, and he's also been saying for months that the way the Fed is going to fight inflation is by raising the federal funds rate, which also puts increased pressure on mortgage rates, upward pressure on mortgage rates. And it's important to know that, you know, there's a saying out there that says, don't fight the Fed. And what does that mean? Simple. If the Fed is communicating something like, we're committed to fighting inflation by raising rates, you probably are smart to make your financial decisions and to be thinking that I need to lean into what the Fed is saying and not try to predict something outside of the realm of what's being communicated. So we can pretty much guarantee that the Fed is going to continue to raise rates, and if rates don't escalate dramatically, they're at the very least going to kind of stay at the heightened level where they are right now, and there's going to be upward pressure. And the reason why is this. A normal inflation rate is right around 2%. That's their goal. But right now, we are at 7% inflation rate. We have a long way to go. I just watched a video online this morning that says that the Fed is going to pivot sooner than later, and I just don't see that as the case. I think they pivot too soon. It's actually going to cause greater inflation. What they're trying to do is suppress prices across the board in the economy, and especially in the housing market. They're trying to raise those interest rates to put downward pressure on prices, and Lord knows we need more affordable housing. So that balance of higher interest rates, which of course raises your monthly payment and does take people out of the market in the short term, in the long term, now we're starting to see things like price reduction, downward pressure on those prices. So even though it was kind of like eating your vegetables for a little while, the future, if this all plays out the way that they are saying and they are intending, will be a positive thing and is a positive thing for buyers. Now, to talk about the housing market, there are so many local housing markets, thousands of them. It's really hard to paint with a very broad brush. For instance, the Knoxville housing market is still extremely hot, but it's nowhere near what it was when people were offering $75,000 over asking price and waiving appraisal fees and waiving inspections. We are not there anymore. The season has changed. In other parts of the country, in California, parts of Texas, Arizona, they've already seen 10, 15, 20% a price reduction. So it is taking effect in certain areas, these higher interest rates, to suppress prices. And I think we're going to see a little bit more of that pressure right here in our state as well. Time will tell. I do not have a crystal ball. Anything is possible, but not everything is probable. And it looks like the Fed is committed to seeing those prices reduced, and we are seeing a big drop off in demand. Now, I want to make sure I stop right here and tell you I am not an economist. I am not a tax professional. I am not a financial advisor. I am a loan officer. I have experience as a real estate appraiser in valuing real estate and looking at markets. And I am not an expert on the economy and those other things. However, I do have, just like you, the ability to see the writing on the wall and make sound, educated judgments and decisions as to what's coming down the pike for us. Now, all that being said, let's talk about a great tool that's offered by Union Home Mortgage that just may be able to save you some money, and that is our Lock and Shop program. Now, how this works for qualified buyers, and it does work for conventional VA, FHA, USDA mortgages, is once you qualify, you are able to lock in today's interest rate for 90 days and shop for a home. Now, normally the way it works is you get pre-approved for a mortgage, and once you find your home and we have that address and you've made an offer, that's when we lock the interest rate. But with this program, we could lock it now. So for 90 days, for 3 months, you know that as the Fed comes out and they make their rate adjustments, and when you know that there's this upward pressure on interest rates, that you will have today's rate, and it'll make you feel a little bit more comfortable and hopefully a little bit more at peace as you shop. If you are a potential home buyer and you're looking for some more information about that Lock and Shop program, give me a call. I'd love to talk with you further. My number is 865-599-0021. Once again, I'm Mike Smith with Union Home Mortgage. Hey, thanks for watching. It's my intent in 2023 to make more of these videos. I hope that you've got some value out of it. If you have and would like to see more, I would love it if you can like this video and go ahead and make some comments below. Maybe you have some insight that I don't have. You know, we're all in this together. This is a conversation, and I would love to hear your opinions and your thoughts as well. But ultimately, I am here to help you. I am at your service here in Knoxville, Tennessee. And thanks so much for watching, and we'll see you next time.